So, Jim, it's interesting to your point about capital markets don't lie. I mean, I've been saying this for years. You and I, on set would be watching and looking and reporting and talking about all the foreign direct investment that has been leaving Canada. It's already gone. It's been gone. It's hundreds of billions of dollars. And nobody thought that this was something to be too worried about. And the issue that people need to recognize is that we actually need investment, whether it's Canadian dollars or Canadians or foreign direct investment to really, build the country and build growth projects. What do you think we can do to even attract capital?
We have to implement economic policies that are friendly to capital. I mean, Catherine, I travel across the country in North America, and it's clear to me that international money is not going to come back into this country until there is a policy change in Ottawa, either from the Liberal NDP coalition or for the Conservatives if they get in. And the common theme that I keep saying to people as I go across the country is just act like an international investor, right? I talk to people all around the world and they say to me, what the heck are Canadians thinking? Like, do they
Hmm.
not see how the rest of the world sees them? Do you not see that per capita GDP is about to drop below the halfway part of the average of OECD? We're falling behind. And yet we've got policy, economic policy, which are basically virtue signaling. That's not economic policy. And so we're just joking and we're
Hmm.
fooling ourselves. And the world is
Right.
watching us.
Yeah, no, it absolutely is. And, I think that when you take a look at even the jobs growth here in Canada, over 80% of it is government jobs. That's where the jobs are coming from. And the government doesn't, they're not known for growing businesses. But what do you think the international markets are saying about Canada? What are they looking at? What concerns them the most?
I think they're waiting. Honestly, I think they're waiting to see what happens when Mr. Polyev gets in, and if he does get in, and what type of policies he puts in place. Are they capital friendly? I mean, let's look at Ireland as a test case. Ireland was, let me say this: Ireland was the sick man of Europe a couple of decades ago, and they put in place capital friendly and private sector friendly policies. Their per capita
Hmm.
GDP right now is 50% higher than the United States. This is
Hmm.
not rocket science. But if you're going to
Hmm.
attack private sector and you're going to attack capital, then the international capital markets say we're not coming back. We got other places to
Yeah.
invest. So I don't. What I say to the Canadians is, let's wake up and smell the coffee. Let's be honest with ourselves. Let's
Hmm.
look in the mirror. And what's interesting for me is that Canadians, 53% of their RRSP assets are still in Canada, and they don't need to be
Right.
in Canada. Right? We were down in New York and we were talking to the largest money manager in the world. You don't have to name, you can connect the dots on who they are. We asked them, how much allocation do you have to Canada? 1%.
Oh yeah. Yeah. Frightening. Frightening. And it's frightening. People need to understand, like it says something. That's number one. So you need to listen and pay attention. But the other aspect too that I've heard a lot about, Jim, from people who are in the industry, is at the end of the day, because there's not foreign capital even buying our companies on the stock exchange, on the market, there's no incremental buyer. And therefore, if you're sitting with only Canadian stocks in your RSP and you're wondering why the stock's not moving much, it's because there's no money flow putting upward pressure, acting as a tailwind to the stock prices.
I was in the underground in Toronto the other day, and I bumped into a legend. We both know him. It was Tom Caldwell, and we were talking about this, and he mentioned to me that I think there was one deal done this year in Canada. One deal.
Mm,
Are you
yeah.
kidding me? I mean, it's that dry. And
Hmm.
so, the question I have, and when we talk about building portfolios, because what I typically try to do is look out 5 to 6 quarters, is let's assume Polyev gets in, right? Let's assume that October's the election and Polyev gets in. How much structural damage has been done in this
Right.
economy for us to basically become much more bullish about Canada for our clients? That's the big question for us.
Right. Well, and obviously, I think a lot of damage has been done, and you can see it in the unaffordability. The fact that food banks, the usage is up by 60%. 20% of the people going to food banks actually have a job. That's frightening that you can't make ends meet and you have a job and you're working really hard. So there's a lot of structural damage, Jim, has been done. But I also think, and you look at the states and the excitement there, I think it can be turned around. I'm pretty excited if we can get it turned around. We'll take a quick break. We'll be right back.